cannot choose which pairs to trade. We cannot choose market conditions, and you can see that market conditions are constantly changing. So once more, my suggestion is do not use your normal risk, half your risk when you're trading until the euro versus Greece does settles down. Until then, just lower your risk and try to trade safely. Do not rush into any trades. I have warned yesterday, if you remember, I also posted a tweet on it, and on Forex Factory, my thread, Spider's Den, I advise you to close your short positions and don't do anything until London opens. And you can see I was right about it, because if you shorted euro dollar, you were in a great profit. But then if you didn't close your orders, probably you're stopped out, or you're at least at break even. So be careful. These things are far from over, so we should pay attention to possible setups. I have one setup of euro dollar in mind, and do it. Just don't do it with normal risk. Half the risk. Okay. Before we begin with the actual slides, I will tell you a quick risk disclaimer, then we will proceed. Online education materials are available on our markets in Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. A risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And Admiral Markets UK Ltd takes no responsibility for information accuracy. The analysis represents the personal opinion of the author. It's me, and in no way it represents the actual suggestion for the trade. These are not MK's opinions, and the website in the video is not a .co.uk website, but a globalnews.com website. Forex is risky business. This should not be taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. Okay. So once more, risk disclaimer about our trades, which you follow on these recaps. Primary thing is, you all know you need to give price a breather. You enter within 5 to 10 pips of the predicted level if it's an agreement with your system. If you're following me with these trades, respect your stop loss, add a spread to your stop loss. If you're making pending order, add for buy, add the spread always. We take only one position. We trade first touches of the zones, okay, because they are most profitable. So if I say that you should sell the pair at this level, and the pair is approaching this first touch of the level or the zone, is your market or pending sell order. So then you need to manage your trade. We don't take second or third touches, okay, because they can spike. Position trades are trend trades, alternative trades are counter trend trades. If I post breakout trades and scalp trades, then you do it as your second entry. So these breakout trades and scalp trades can be done independently of any trades. So they can be counted as second entry, okay? A question Carolyn is asking, what if it does not hit the level but comes in its proximity? I'm telling you, guys, you need to respect the rules. 5 to 10 pips. So if I say that you should sell euro at 1.2030, you can sell it at 1.1220. If your risk is 0.3, for example, lots, and that fits your stop loss, and you have 0.5 risk, let's say, per this trade, you can divide lots. So you can sell at 0.15 at this level, and if it retraces a little bit back, you can add 0.15, keeping your risk the same, even lower, okay? That is how you do it. You need to understand the principles, because I was told a couple of times, even though my trades were in profit, some people were telling me that they made a loss, because you need to respect the rules. This is not just for watching it, just for reading. These are the rules. This is how we trade, because market is volatile. You don't know if any news now it's especially because Greece situation. You need really to be very careful about your trades, and you need to respect the rules I'm imposing. Okay, do not fight these rules. Do not fight making up your own. These are the rules, and you need to respect it. Okay, you need to be, you need to know just 10% of that which I have been teaching you. Okay, so if the price goes into the zone, so the zone is 10 pips, 5 to 10 pips, that is the zone. You sell it, okay, or you buy it. But if I sell, so let's say this is the zone, 5 to 10 pips, okay? This is the zone. And the price is getting into the zone, okay? And if it hits that level, then you can enter with full risk potential. But if it's in the zone and it's struggling to hit the level, then you can divide your lot size. So instead of 0.5, you can open 0.25. And if the price hits the actual level, then you can add another 0.25. But your account will be safe, guys. I've been trading for, okay, now this is my 7th year of trading, okay, and I know what I'm talking about. If you keep your risk low, you will be earning the money and you will not lose much. So your account will be grateful to you, okay. If you have $1,000, you need to trade with 0.1 or 0.05 lot, okay? Unless you want to gamble, whatever, then you raise your lot size, right? And that is how you should do it. You cannot risk 0.8 and then get margin call, okay? This is how you do it. This is how proper trading is done. Now, obviously, if you want to scalp, this is not for scalp. This is for trades of 20, at least 20 pips, guys. That is what I have been what I have underlined here, because this is very important. Depending on time and volatility, usage of trailing stop is recommended highly. Usually after 20 pips of profit, not less. So minimum 20 pips of profit. I have been saying this since the inception of these recaps. So minimum 20 pips of profit, unless you make scalps, then you can take 15, 10, 15 pips. But if you're making these position trades, alternative trades, minimum 20 pips of profit, minimum, guys. So after 20 pips, you need to decide whether you will take the profit, whether you will put your stop loss to break even, whether you will, I don't know, put it to break even plus 15 or whatever. But minimum is 20 pips. Then you do trade management. If you get 30 pips, okay, put it to, I don't know, 25 pips. If there is momentum, you can get 50 pips. Then, I don't know, put your break even, put your stop loss to plus 45. But you cannot tell me that if the price has made 20 pips of profit, you made a loss. That is not acceptable, because that is not how I have been teaching you. So once more, for all of you who have been visiting webinars and for all of you guys who have been listening to me, and after 20 pips of profit, do your trade management. If you're not able to do it, for example, you're sleeping or I don't know, you go out, then grab Admiral Markets platform on your mobile phone and manage your trade via your mobile phone, or get I don't know, trailing stop manager and then leave it on your computer, but you should not shut down your computer. That is why it's always good to have a mobile phone platform also with you. Other markets has provided us with mobile support for both Android and iPhone, so you can have it. Okay, it's not big investment to buy a smartphone and manage your trade by smartphone. Okay, So that is why I'm saying you, if you make 20 pips of profit and you see that market is going your way, okay, you just do your trade management. Take your 20 pips, put your stop loss to break even, and I don't know, go for 50, 100 pips. But you need to do it after 20 pips of profit, not less than 20 pips. Okay, now depending on the entry, if the actual level is hit, for example, this level 2600, and you have bought it at 2610, okay, and the price has come to 2630, then it's 20 pips of profit. But if you have bought it here and the price didn't make it to 2600, but it has come, for example, to 2620, okay, that's, you're basically counting the exact level. So just watch the level, watch it how it behaves, and then you decide what you should do. Okay. So the actual level is counted into these 20 pips. But if you buy it 10 pips, for example, above or below it, then do it after 10 pips of profit. You need to decide what you will do with your trade. And if you sleep and you cannot manage it, then I really advise you to grab a trailing stop manager, expert advisor, and leave it running over the night. Or if you're not close to your PC, grab your mobile support. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Okay, scalp trade should be done at the level, not very close, means 1 or 2 pips, not 5 pips. So scalp trades at the level. Okay, calculated by historical levels at Camarilla. Use it. You can add these levels to your system. Pay attention to Twitter updates. Okay, and pips pool is the maximum available number of pips you could have got on recap entries. Pips pool. Okay. So these were the results for previous week, 22nd of June 2015. Euro dollar, you could have made 20, 25 pips or break even depending on your trade management. Pound dollar, you could have made 20 pips or break even, but breakout setup gave us 30 pips of profit. I said that breakout trades are done independently, so those are second entry. So plus 20 or break even and plus 30 on breakout. Australian dollar either plus 30 or plus 70 depending on your trade management. Euro yen didn't qualify, but was, if it had been qualified, this could have been, and this would have been the trade of the week, definitely. And dollar yen went into 20 pips of loss. So counting this, you could have made maximum 120 pips. So even if you made 15 pips out of this, everything, it's still good, concerning that the previous week was really, really hard to trade. Very, very hard to trade. And that is why I have been saying, guys, use lower risk size, do not risk much, and do not emphasize the risk on every or on any of your trades. Okay, now let's check the results. So this is euro dollar. I said that euro dollar is in whipsaw. Indeed, it's in whipsaw, but then what happened is we could have made a sell and buy position. First entry was alternative counter trend buy. 13.25 was hit. Then you can see 20 or 25 pips, guys, you could have made. Now, if you see that you have made 20 or 25 pips, then you use your trade management. If you see that euro dollar is losing the momentum, grab your pips, put it to break even, but do not lose your pips because you want to grab 100 pips. This is risky now. You need to adapt to current market conditions. And that is why Camarilla MACD is really, it's excellent, because even in these conditions, it can give you pips. Pound dollar, I said buy around 57.90, 57.55 was stop loss. And alternative breakout sell, 57.53. I stated, if you remember, clearly that if it breaks this level, go for breakout trade. What happened was basically our level was hit to the pip, okay? And then look at this. Bang, it made 20 pips, okay? It made 20, 22 pips, but let's say 20 pips. But then it drops. So after 20 pips, you do your trade management. Grab the pips, put it to break even, but do not lose the trade, because this trade was breakout and it made straight to the target, okay? Straight to the target. Even better, okay? So this level was broken, bang, 30 pips. Now the trade of the week, Australian dollar, okay? 77.10 buy, 76.80 stop loss, 78.00 target. What happened was, this was our entry, okay, somewhere around this region here. And look, here, stop loss was never hit. Now, if you did your trade management, you could have made maximum of 70 pips, but 30 pips was great because of the volatility, guys, okay? Because of the volatility, okay? And always add the spread to your stop loss, always. Euro yen, I told you to sell 140.70, was aiming for 139.50. Unfortunately, yes, the target was hit. But that is why I'm telling you, do not pay attention just to these levels, just to that. Yes, they're great and you can trade by it. But also pay attention to general trend. Many traders thought that, see, euro yen is rejecting from resistance, and they thought that if it is rejecting from resistance, then great. Next time this resistance will be broken, because this looked like it was really buy the dip mode. I told you to sell here, but unfortunately the price didn't pull back to this level. But yet, look at this, it hit the target. So go for short trades, even if it doesn't reach this. This is also the analysis. Yes, these are kind of signals, indeed. I know that. But also this is the analysis. This is the great, always good analysis, because it always uh, gets the trend, captures the trend. Sometimes if something changes, I always post on Twitter. So you can read the revised analysis. You can read maybe another setup, but usually next couple of days is what I write on the slide. So euro yen is rejecting and euro yen should be sold. And if yes, the price didn't hit our sell level, but it doesn't matter because it was going towards the target and it was basically following the trend. Now, what I prepared for you is yen, yes, and finally dollar yen hit stop loss. So this was our entry. I told you that this is the only way we could see short, and I was right again, because if it hits, I told you that if it hits the stop loss, it will go up, and yes, 123.70 was broken, and then the price went up. So basically, unfortunately, well, if we made the stop loss bigger, but well, only 20 pips, so it's good. Only 20 pips of a loss, and that is the only loss we made last week. So today, again, guys, for next couple of days, be very careful with euro dollar. This pair is not to be taken lightly at this point. You can see what is happening with the pair. It's going up, it's going down, it gapped down. Traders started to short, then it went up. So guys, be careful. Euro dollar is in whipsaw on higher time frames. Position trading is dangerous now to Greece situation. It changes constantly. Do not trade this pair if you don't have to. The only possible setup I can see is sell, of course, because if you read the analysis, I was right with euro dollar. It hit all the targets, okay? And the analysis clearly said, guys, clearly said that that you should short it, not buy it. I'm really very hard now to buy the euro. And you can see it here, euro dollar choppy, whipsaw, but still bearish. So this analysis, guys, told you to sell. Okay. And if you sold it over the weekend, even if you kept your trade, you would have been in great profit. And then on Forex Factory Spiders, then I told you to be careful yesterday. I advised closing all short position and waiting till London opens. Okay, this was the plan. Now let's see why this level and why stop. Okay, so euro dollar. Yeah, Goran is asking, he's not clear why most traders have been selling, were selling dollar yesterday, of course, except euro. Yeah, there is no, well, guys, the problem is yesterday when this gap was made, traders start to close their positions because London usually, now this is separate subject, but London needs to do its daily fix. Okay, now I cannot talk specifically what is London fix. It usually happens at 14, yeah, it's at 16 GMT, and maybe I will write an article explaining what the London fix is. And I knew that, well, I was 80% sure that everyone should close euro dollar and then wait for London open. Okay. Now the thing is, after London fix, the things has settled down, and the thing has settled down on euro dollar, but still the market, you see, it's still back in the range, guys. This is the range. Okay, this is the range. So it's still back in the range. Okay, look, this is the range. So it's still in the range. This is news and this is technicals now. Okay. Carol is saying, I lose more than 100 pips or only the value of my stop loss. I don't understand the question, Carolyn. Your risk should be the same always. It doesn't matter if you have 20 or 100 pips stop loss. Your risk should be 0.5, or if you're very sure in your trade, 1%. Okay. What happens if I have stop loss at 38 fib and the market opens with that big gap? Yeah, there is no, guys. Okay, now I understand you. Yes, he lost because of slippage. Ilya, you're right. This is not called slippage, okay? I will explain. For example, you wanted to buy, right? At this point, okay? And over the weekend, for example, you put your stop loss here, okay? And then market opens here. Guys, there is no platform until your stop loss is guaranteed. Yes, maybe I need to read. I'm not sure. I think that there is no guaranteed stop loss. What it means? Because when market opens, usually this opening price is immediately taken into account and your stop loss is noted here, not here where you put it. This happens after the weekend. Okay, and that is why I'm saying, guys, be very careful when you trade and when you open trades during the weekend. Okay, yes, it's best to exit on Friday, or if you want to carry the trade, do it with low risk. Even if you do it with initially with 0.5 risk, and this level was hit, that would be only maybe 1 to 1.5% of a loss. So it's not big risk. But I know that you can be in a problem, because if you risk 3% of your account and you had here your stop loss, and your stop loss was executed here. You actually could have lost 10% of your account. So that's cumulative, okay? So don't do it like that. Listen to what I'm saying, what I'm teaching you, and do it as I say. If you want to take risk trades, bigger risk, then okay, wait for the market to settle down. But because market is volatile, this is the time when you should really, really use low risk. Goran is asking, is this V-shaped reversal? Yes, Goran, this is V-shaped reversal. But actually, this V-shaped reversal gets, okay, it gets us into the channel, horizontal sideways movement. This is very logical. The price tells you everything. Look at this, guys, okay? Look at this. This is where the sideways movement has started. And this is now because of Greece. Over the weekend, we had Greece government quitting negotiations and everyone was selling euros. Then today there is announcement that, well, still there can be some hope for Greece and euro. I was telling you guys, I don't think that Greece will exit eurozone, really. There is maybe bigger problem than that IMF and creditors have with Greece. Exiting the eurozone will begin a domino effect, so it won't be good for eurozone. So they will avoid eurozone. Now the referendum, I think, it will definitely solve the question whether Greece wants to be in eurozone or not. I think that majority of Greeks want to stay in the eurozone, but still we will see what referendum will be. Because of that, you can see that price has been ranging, guys, okay? Because you can see that price has been ranging, okay? Look at this, the range, okay? And now that is what I'm telling you. This is the level to sell. I'm going now with this sideways movement. Sell here around this level. Put your stop loss to 100 to 12.50. So this is your stop loss, okay? And if you lose, you will lose 20 pips. If you make the money, you can make at least 50, 60 pips, but use the trading stop, okay? Pound dollar, guys. Pound dollar. And now it's you can see what I made on Forex Street. There is a Forex Street poll, and I made 1.58 target, but I think that cable has the chance really to surge towards 58.50. Just check the poll, you will see my opinion on cable, and I think it still can be bought. We have three possible trades on pound. 57.00 buy. This is crucial stop loss, guys, okay? Crucial stop loss, and this is the target. I think that we can see 57.00 only if tomorrow's data release on pound is bearish. So the pound can be bought on dip. Maybe if the news favor us, we could see this position. Buy scalp is also possible exactly at 1.5740. Watch this level for possible scalp trade. And breakout sell only if 5640 is broken. Then we go with this trade. 5640 entry, stop loss, last high, target price 5610. Okay. Okay. The question, Sir, cable in Asia made a lower level than the previous ones we saw last week. Do you think that this means that London and American markets will now challenge this level and break cable lower? No, I don't think so. I don't think that the cable will be sold, really. Jen, I don't think that the cable will be sold. I think that cable will be bought. Okay, I will show you now. This is now some range, but I think that this level 57.40, I will say, this can be a retest of this trend line for a scalp trade, guys. And this is the only way I can see it here. If it gets into the triangle back, then 57 buy, guys, 56.40 is crucial, okay? This is your stop loss. Below that, breakout trade here, buy trade here, scalp trade, okay? What do you recommend on getting news instantly for free? Neil Shah is asking. There is some websites, I'm not sure what the name is, that if you pay, they can give you news some milliseconds prior to the standard news calendar. Okay, so I don't use it. Okay. In Romania, euro keeps rising. It's crazy. I don't understand why. Carolyn is asking. Okay, in Romania, do you have your own currency or do you use your own money? If you have your own currency, that is normal, because here also where I live, euro is rising, but it's rising compared to our national currency, not to versus other major currency pairs. So that is other thing. So if you have your own currency, yeah, maybe the euro is rising versus your own currency, okay? Yeah, Carolyn is saying, I don't know what cable is. Okay, Carolyn, cable is pound dollar. Cable is pound dollar. Fiber is euro dollar. Kiwi is New Zealand dollar. Caddy is dollar CAD. Dragon is pound yen. Uh, there are a lot of nicknames for these currency pairs. Yonan is saying, I use Forex News Gun. Okay, Forex News Gun is maybe that website which can give you news releases a couple of milliseconds before they're actually released over the internet. Okay, I didn't check it, so please use it at your own risk. Yeah, RON, our currency, Carol is saying, so it's Romanian currency, okay? And yes, that is normal. Euro keeps, for example, rising versus dollar because you can see the trend, but or it's falling versus dollar, but it doesn't have any impact to your national currency because your national currency is not into G10 group, or it doesn't fit into international foreign exchange market. So probably, yes, I know here in our banks, we cannot interchange our national currency or euro to, for example, Czech krunas or Romanian levs. What is the name? I don't know, Romanian currency. So those are not exchangeable. So only the pairs which are exchangeable will have your logical effect, okay? You can basically exchange it in a normal forex exchange office. Here by MT4 you cannot trade your own currency, so you should not be confused why euro is for example falling versus dollar and it's rising versus your national currency. Okay. Claudio is saying because of his prime minister or national bank governor. Well, that is, yeah, that is basically, yeah, I knew it. It's uh, Liu, Romania currency. Lei, yes, it's lei. We call it lev, so yes. Well, maybe your prime minister wants a weak currency, but okay, it's normal because weaker currency in fact helps your exports. Now, I don't know if Romania is a big exporter, but if Romania exports probably to European Union, then weaker currency is better for your for your national national growth, okay, and GDP generally, okay. So that is that's normal because Germans, who are basically the biggest exporters in European Union, they're definitely enjoying weaker euros, okay, and weaker euros always favors exporters, and because importers can buy from a lower price, okay. Yes, I'm right. Leo, singular lev is plural. So lev, yeah, we call it lev. You see, euro dollar is really rising. So that is what I'm saying, guys. This is now the range again. See, the gap has been closed and we are in range. And I think that we can sell it here, guys. Only 20 pips stop loss. So don't be very nervous with euro dollar. Okay. If you listen to what I'm saying, at least on these on these session recaps and other webinars, including Admiral Market Analysis, which I do, you will be free, you will be good, okay? And don't forget, guys, only first touch of the level. Okay, this is the first touch, okay? This is the second touch, this is the third touch, this is the fourth touch of the zone. This is the most profitable ones. And by the rule of the thumb, I'll always trade this first touch of the level, okay? So this is how I do it, okay? Jen is asking, when cable gets to 58.34, maximum 58.50, do you not think cable will then see another leg down? Okay, Jen, I don't do Elliott wave analysis, and I cannot predict in the way of Elliott wave because I never studied Elliott waves. Technical analysis is different than Elliott waves. Technical analysis is reacting, not predicting, okay? So my favorite quote, my personal quote is, do not predict, react. And by giving you these small, I can say predictions, but these are technical levels. I'm telling you where to react. I'm always telling you where to react. So how can I tell you that if pound gets to 58.50, it will reject that? I don't know. It depends on a lot of factors, guys. I don't do big forecasts. You know, I do intraday trades and I'm giving you intra-week setups. So my trades are usually good for today, tomorrow, and day after tomorrow. Okay? Those first touches, zones, you always trade the first touch and you watch how it behaves when it gets to second touch or the third touch. But I just cannot tell you, because how can I tell you that if it gets here, it will go down? Maybe there will be some news for pound and it will go to 1.6000. That is why I don't do forecast. It's not for me, for my way how I trade and from the point how I teach. I don't do big predictions. I tell you where the price will react, usually where the price should react for intraday and intra-week setups. And yes, this is the level for scalp trades, this is the level for buy trades, this is the level for sell trade breakout. Usually that will give you pips. But if it gets to 58.50, maybe it will go back here in the upper range. We need to see. Do not predict, react. Okay, react. Okay. Yeah, Xena, warrior princess, he has a saying, act, don't react. Yes, but I'm talking about predictions. So do not react, do not predict. Okay. So I'm telling you where you should react and where the price has a big tendency to react. So these are the levels where the price has really a big tendency to react. So always watch it, okay? So that is pound. Now Australian dollar. Now I think that something around 77.00 with stop loss of 77.30, we can get a price of 76.20. If breakout sell happens, okay, at this is another trade you should be paying attention to, okay? 76.85, stop loss last high 76.40. Okay, let me check one more thing. I'm not sure about this. Okay, no, this is my mistake because I didn't do that. Is for another. No. I will delete this. So yeah, this is the only way to trade because we have a trade. We had a trade today on a first touch of the level, guys. I will be showing you. So that was the first touch of the level, and we could have made some 40 pips, I think. Let me correct this. so it doesn't confuse you, okay? I think this will not confuse you now. So this is the setup for Australian dollar, okay? 7700. Okay, why I'm saying 7700? I will show you now why. I think that the pair still has the chance to basically sell from the zone, but this is why I'm saying primarily. Today, if you read the analysis I published on Admiral Markets website, Forex Factory and Forex Street, okay, I was telling you that this zone can be good for sell. So this is what happened. The price came 5 pips in the zone and then it was sold, but only for 40 pips, something like here, okay? So you could have seen it. We can see it on 15-minute time frame. Okay. Price came here and was sold here. So now I want to see it higher, at least around 7700. And 7710 is another strong resistance here because you can see that this was a breakout trade, breakout happening on this pair. And after the breakout, you can see the price went down, okay? So this is what I see a possible sell, but do not risk much because we already had today's sell and the price didn't proceed down. So do it, if you do it with low risk and trailing stop, okay? Because we sold it here and this level should have been touched, but there was no touch of the level. It now, after it hits this level for some 40 pips, it went up. So guys, yeah, please do not trade over level, do not over level. So this is now the zone for a possible sell, 7700. Okay, this is the slide for Australian dollar. Douglas is saying Australian dollar slide is not showing. I think that it is showing now. Okay, so this is the slide, right? Yeah, you can see the slide. Euro yen, I think that we can sell it at 137.60, 137.90 is stop loss towards 136.00. Okay, we need it here because here is where we have 78.6 previous breakout, history of buying and possible now moment sellers. So if it jumps up, we could try to sell it there, okay? But also, guys, watch 137.90 again for possible scalp. But I don't recommend this. The only thing I recommend now is try to sell it here if it gets to this level, okay? Because only 30 pips of a stop loss, okay? And it corresponds to 78.6. So initially, this should be a good rejection from this level here. Okay, so that is euro yen. And finally, dollar CAD, 23.35 buy, 23.00 stop loss, first target 23.70, second target 24.10. Because this price is trying to go up, it's clearly an uptrend. If it gets here into the triangle, this is the level where we can try to buy it. Below this level is stop loss. But then if we get a buy order here, this should be the first target, the upper resistance of the triangle, this trend line here. And 24.20 should be reached. So we want to see a bigger pullback. That is the only, I cannot tell you for other pairs, setups for other pairs because it's hard to do it at this point, especially euro crosses. I don't analyze any of euro crosses until Greece versus European Union settles down. Okay, So this is now safest to trade these pairs with really low risk, and you should be fine. Okay. So once more I will go through slides, and if you have any questions, you can of course ask me. So euro dollar plan, only 10 pips stop loss. This is your stop loss plus the spread. Pound dollar, Australian dollar, dollar yen, dollar New Zealand. Yes, I will go through New Zealand dollar and dollar yen. Euro yen, dollar CAD. Now about New Zealand dollar, I think the New Zealand dollar is still in a good mood for sell. Now the thing is, we have some. This is the major resistance now, interim resistance, and this is interim support. So New Zealand dollar, you see, it's trying to follow euro dollar. When euro dollar is going up, New Zealand dollar is going down. When euro dollar is going down, New Zealand dollar is going more down. Okay, so I think that the general trend is down. We can sell it, and where I would sell it is definitely, let's do this swing here. So the other point for sell could be this one 68, 70 to 65. Try to sell it here. Your stop loss should be only 20, 25 pips, and it should go down. So from this perspective, it should go down again. Okay. And if this level breaks, it will touch 67.40 to 67.50. Okay. So for me, New Zealand dollar is still sell on rallies. Dollar yen, of course, dollar yen, in my opinion, is sell. I made some small scalp on dollar yen today, but unfortunately, I should have held it because this is the scalp that could have been a great intraday setup. This is the zone to sell, okay? This is the zone where you can try to sell this pair. But your target should not be very high because this pair is not moving except when there is news. It's not moving by a great ATR. So, okay, see, it's not big ATR, 75 only. Neil is asking, what are those lines, H3, H4, L3, L4? Neil, I advise you to take a look at my webinar. It's called Camarilla. So quickly I will tell you, but this is very, very quick because I'm teaching about Camarilla, and the Camarilla MACD is my method which I have invented, and where I present you with session recap trades and daily analysis. So quick resume. These are initially resistance levels. These are initially support. This is daily pivot, and price usually opens up in between H3 and L3. Initially, these are supports. Initially, these are resistance, and they change their purpose when they are broken. So if you don't know what are these lines, please refer to my webinar about Camarilla. So dollar yen is in this time sell on rallies. Okay. Yes, it's recovering, and but you see there is really a big gap still. Retail gap. It's hardly recovering. Carolyn is saying, I sent you mails, but there was no answer. I hope you're not upset with me. Carolyn, I promise you, I'm not upset. It's impossible because I have responded every mail I saw. Maybe my mails are put into your spam folder. Send me your mail right away, please. Okay? and I will respond you because I have responded every single email. Of course, I'm not upset with you and not with anyone else. And I'm really trying to answer all the emails. But guys, maybe sometimes I skip it, but I'm not upset. And please do, if I didn't respond to you, please send me an email right away. Okay, Caroline? This is for you. Send me your email and I will see what you want me to send you or whatever. Okay? Why would be I upset? New Zealand dollar, I told you, sell also dollar yen looks like a sell, but still it's not big ATR, so I don't recommend this pair to trade, really. And finally, Australian dollar yen. Australian dollar yen, okay? The same thing, possible sell on rallies, and let's see if there is Fibonacci somewhere here. Yes, this is the zone for a possible sell on a retest here. This could be also the possible zone to sell here, and you should pay attention to. There is also a steep trend line here. Okay, so you see, this is all caused by Greece versus Euro. So yeah, this is range play, but still sells can be possible. Okay. Yes, I will roll on these slides again. So Carolyn, please send me your email right away. I will see it after I finish this webinar and I will respond if I haven't done it already. Okay. No, Carolyn, can you, it's your mail, I can see it. Let me find it here on my other screen. Guys, let's see one. I will go through these slides until I find Carolyn's mail and I will see if I made a response. Ah, you were asking me on Friday, Carolyn, right? Aha, yeah, I see it. I see it. Okay, this is the analysis I need to watch for. I was thinking that you sent me an email asking for indicator or template. Okay, no problem. I need some time to look at it, but I will answer. Okay. Okay, but I just sometimes, you know, there is time when I need to sit down and make a big response. So I will try to do that. Okay. Okay, yeah. I will take a look. I will take a look, Caroline. Okay, so slides again. Euro dollar, pound dollar. Australian dollar. Euro yen. And dollar CAD. Jen is asking, I noticed that when euro dollar is sold, cable drops to lower part of range. When euro picks up, cable moves towards upper part of range. If euro is going to be sold, then do you think cable will then move again to lower aspect of range? Yes, partially, Jen, because euro dollar and cable are correlated, okay? They have a positive correlation. Okay, compare these two charts. This is cable, this is euro dollar. When one pair goes down, usually other pair follows. Now, guys, this is why I advise you, grab your expert advisors. Take this. I have made some webinars about this. Grab your correlation matrix. Open your correlation matrix here, okay? Press OK, correlation matrix. Put H1. You can go with, I don't know, 50 bucks. It's okay. And look for intraday setups. Euro, dollar, and pound are having positive correlation. This is great tool, guys. Do not forget to use Admiral Market Supreme Edition. I strongly encourage you to do that, because Admiral Market Supreme Edition is the best tool for intraday and even intra-week trading. It's great, okay? So this is the tool I use. Euro dollar today on the last 50 bars of 1 hour, so it's 2 days of trading. It has 79, so it's exactly positive correlation. You can see it's going in the same direction. Use it to your advantage. So yes, if euro dollar is sold, cable will probably go down. Okay, yes, Jen, okay. Neil is asking, do you need to deposit more money to use Supreme? Neil, the only thing you should consider is open live account. You just need a live account and you will have Supreme Edition, okay? Use it. You need to have a live account and you will have your Supreme Edition, okay? And guys, also do not forget to sign up for the webinar I will have tomorrow with Forex Street. Okay, so I will do news analysis concepts, and I will, on the second part of the webinar, I will teach how news trading is done. So be sure to register for this. It will happen tomorrow. Okay, and register for the webinar. So guys, I don't see any questions. So that's it. Let's see if the market will favor us. I still think, guys, just listen to what I'm saying. You will be fine. You will be fine. Do not use big risk. If you used 1% of risk before this Greece versus European Union nonsense is taking place on charts, because really this, I don't like to see this movement. Then use 0.5% of a risk. Just adapt to current market conditions. Do not overtrade. Do not leverage your trades unnecessarily. Market will be brought on normal tracks, and the market will be again normal. But let's wait for things to settle up. So euro dollar, other pairs are really better to trade. New Zealand dollar, even pound dollar, even Australian dollar. So much better than euro crosses. Okay, take that into account. So thank you guys for listening. Thank you for your questions and comments. I will be here with you soon. Sign up for more webinars. Cheers, guys, and as always, trade safe. Thank you.